Welcome. This is BloombergQuint. We are taking stock of Intellect Design Arena's quarter gone by, and I am in conversation with the Chairman and Managing Director, Arun Jain. Mr. Jain, good morning and thanks for taking the time out. Well, I want to start with your assessment of the quarter because at least as far as the top line is concerned, on a sequential basis as well as on a year-on-year basis, we have seen some weakness come through. How are you assessing this quarter?
Yeah, obviously, I think this could have been better. So that's the first response. But if you look at the underlying fact of the business where SaaS revenue has grown by 50% in one single year, and I want to highlight to investors that SaaS revenue is like real estate business where you build up the building and build up the building in the beginning, but then rentals are coming for next 10, 20 years. So that's the nature of the SaaS businesses, and that's why we can realize much better revenue. So 5%, last year same time we had a 5% revenue from SaaS. This year we have 10% revenue coming from SaaS. I think that's the nature of the business is shifting, and that is resulting in the kind of a profit shift of the efficiencies. So in last year we had a revenue of 378 crore giving 41 crore EBITDA, and if I look at it with the progressive deal finalization, which is around 350 crore or $50 million revenue, around 356 crore, our EBITDA is moved up to 37 crore. So it's just a operational efficiency getting very, very high level of operational efficiency. So incremental revenue, we believe that we can generate 70% to the bottom line, and that's where the marginal improvement technology comes in and product kicking in. So that's where we see internally in our organization that this is a tipping point for the organization for the 2020, whatever we design our technologies to drive higher growth, because clouds have a higher growth number with the proper profitability coming in with 70% on increased revenue. That's a phenomenal excitement in the company.
So, even if I look at the 9-month move, and of course there's been clear weakness, even if you consider 9 months. If you're talking about the transitions in various aspects of the business here, then in that case, how will this play out in the top line eventually, say over the next 3-4 quarters? And in this transition, will it take as long as 3-4 quarters? Could it be sooner, or could it be more than just 3-4 quarters?
If you look at it from last 3 quarters number, one is the top line number, which shown the weakness because it's a year of transition from pure license to the SaaS-based revenue, and the shift in the market, which we were expecting 18 months later. So I don't want to be defensive about it. I think we acted very well. My research and engineering, we increased to annualized 132 crore or 33 crore per quarter in the 19. If you look at last quarter, we reduced to 31 crore. It's a 2 crore decrease, which may be very minor from the investor perspective. But now we are on the closing of those robust products which are coming in from the stable. And this is the time, if incremental, if I get another 50 crore revenue from 350 crore to 400 crore, I'm saying 35 crore will directly getting into the EBITDA line. And that's a basic shift. And at 500 crore, top line, we can generate a EBITDA of 150 crore. That's a kind of a acceleration we can drive.
Okay, so going forward, when it comes to revenues coming in from AMC as well as licenses, how do things pan out from here on as to whenever there starts coming in a significant contribution from these lines?
Yeah, so AMC revenue, if you observe, this is close to 250 crore annualized revenue, so 63 crore revenue for this quarter. And I think this will be growing at least 15% year on year. And that revenue is directly to the bottom line. And cloud revenue, currently it's at 132 crore annualized basis, 33 crore in a quarter basis. That also growing 15 to 17% year on year could be quite a good traction to drive the appropriate EPS returns for the shareholders.
Okay, and so in this process, are we looking to raise any funds to fund this transition, or will this all be through internal accruals?
No, these are through internal accruals. So if you look at from last quarter to this quarter, we have a similar amount of debt, around less than 100 crore debt is there. So we reduce the debt by 9 crores. So it's a positive movement that we are able to manage our cash flows much better now, because we are containing our technology, and our technology coming to the point where products are getting completed, and so less burn is there.
All right, so in the very near term, if you just consider the fourth quarter and perhaps the first quarter of FY21, would you, well, perhaps say that investors should expect a little more volatility, a little more lumpiness when it comes to the top line as well as the bottom line going forward, considering this transition?
I'm saying now the transition is over in last 19. Q4 and Q1 should be better than the last 2 quarters. So some of the deals which are not closed in this year, that will be coming. Now it's a better predictability for Q4 and Q1 for the investor. So investor should see better results in Q4 and Q1 21.
Okay, Mr. Jain, we leave it at that. Thank you so much for joining us and taking us through your outlook for the company. Thank you.